So soybeans for sure today we're going to talk about. Obviously cattle, the cash cattle. And then what to do with corn. What are the options that we can even do? And then we'll run through a whole bunch of that stuff.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we got a whole pile of stuff to talk about. I'm going to run through a quick list and then you can pick where to start. So first, we're going to throw some, or not we, but bombs are going to be thrown at Qatar, and oil goes down $5. Beans are like 20 cents under cash. Corn's like 10 cents under cash. Cattle is like $20 under cash.
Yep.
What is going and
they hate commodities.
They hate commodities because the S&P and the NASDAQ and the Dow are all ripping higher today.
Yeah.
What is going on with these markets?
So started Saturday with the U.S. getting involved, and then one would think, hey, we're going to have a huge Sunday open. And it might have even been Friday night, but I think it was Saturday. And oil opened up $5. And we already had a nice little tailwind with grains last year. So I'm thinking, oh, this one's going to be about the higher grains, why we're going higher, the higher oil. Are the shorts going to have to cover? And absolutely none of that happened. It just completely crashed and burned, even by this morning. And then if it is a symbolic thing, it's mainly what happened last time. In Trump's first term, they bombed Soleimani. Anyway, there was just that. Remember that ring and that finger left?
Yep.
And by the airport there, they did the same thing. They lobbed some towards the desert, towards U.S. bases, but where they knew no people would be. Sounds like that's what they did here, thus the reversals. But I don't even think that it was that way for the grains. They started selling those on the open last night, and rough day in wheat, corn, and soybeans. Corn down 11 at one point. I think it down 10 to 7. They keep on bear spreading it. They keep bear spreading soybeans. Wheat had looked good. He had a bunch of short covering. Now that was down 15 today. So a complete train wreck of the grain market. So let's talk about what we can do. Turn
around Tuesday. That's what we can do. Should have bought on the close. No, I'm just kidding. No, it's not trading advice.
That is that pattern has not worked. It's basically any rally at night short is what has been working. Of course, when you try to join them, then it won't work. What can you do with the flaming wreckage that is the grain market? Well, most people have chosen to ignore it. That's very common. Today, the first call started coming in for the short-sided corn. And it is that time of year, so it's not surprising guys are going to start talking about that. We'll talk about beans. Beans actually have a more of a feeling like if we pull back here, that it'll get bought. We have the biodiesel news. We have the smaller acres. So the bean market, in my opinion, is a lot different market than the soybean meal, corn. The feed markets just look heavy. They look like they want to go down. The funds are heavily short. They started covering and immediately went right back to shorting today. And it's that time of year where you get that big day down. Everyone waits for a bounce to try to short it, and that bounce doesn't come. And then you end up with your summer low fairly quick. We are, June 22nd, 23rd today?
Yeah, 23rd, yep.
And it's very common for highs to come in here now. Now, the argument would be we never went up, and you could make that argument. And then you look at the weather. We have the crop conditions come out. By the time you hear this, you'll know it. Likely to go higher. We don't know that yet. But if it's 70-40% good to excellent in corn, you're gonna see the market not real happy about that. And then all the storms. Like, you're going to see bad pictures, a lot of damaged bins in North Dakota. Minnesota had plenty of damage, but nothing like North Dakota where there was more severe weather. Obviously, it's going to damage fields. You've seen damage all the way east. I heard on the phones. You're going to start seeing these scary pictures, and the market's not going to care. I mean, this is pretty normal for this time of year. You're going to have adverse weather. That's why you have planted and harvested. It's not all going to make it. It's really bad for the guys that it happens to. I talked to one of my clients. They got hailed out the other day. Everything was looking perfect. So that's really the only bull argument is you have these storms wrecking stuff, and you're going to have some trouble spots in like southern Illinois still. There's a lot of stuff going on there with insurance claims. But overall, you don't have a catalyst, and they want to be short commodities. Like you started, these sort of stories would have stuff up and ripping in a normal commodity market. And we're far from that. They want to be short. They want to press the short side. And I don't see what's going to stop them right now.
No, and the bad part is that you need major storms or major catalysts to change this. And I thought that was going to be continued bombing. I thought the U.S. getting involved on Saturday and then retaliation this morning, basically overnight. Like, how can wheat not be limit up, or how can oil not be limit? And it was not. The selling in commodities is just crazy.
Yeah, and you got gold and silver and the metals, and you have inflationary stuff happening. And the argument is, and this is why the shorts are so tough in grains, that it's going to come. They're going to realize how underpriced all these grain commodities are. So if you get short join the trend and get short at the time of year, then all of a sudden they're going to see this stuff is undervalued and start buying it. I'll wait until we see that to adjust strategies. But what can you do? Is there anything you can do? I like the carry in the corn market. We have a lot. 450 in March. I feel like that's a number a guy can work with. Do you short futures? Buy a call up front here, like an August call. Give yourself that synthetic put. Do you short futures, or do you buy a put near the money and then sell a call, like a $5 call? Sell two $5 calls, buy a put. Do you sell your corn, contract your corn, and then buy a call? I mean, how are we going to cover this? What are we going to do? Right now, short is obviously the position that's working. This is a time of year where they normally press it. So you'd want to look for those strategies if you're looking at the seasonals. If you're in the camp like I was just talking about, where the inflation's going to finally catch up with the grains this year, then all these bushels you sell this summer, you'd want to re-own. You'd look for spots at these lows to re-own. Who's going to be right? Who's going to be wrong? The bear camp looks extremely strong to me. The wheat, how long have they been short wheat? 3, 3.5, 4, like extreme position I'm talking about.
Yeah, it's been extreme for a long time. Yeah. I'm just sorry. I want to go back to your corn thing though. When you were talking about your different options, is selling a call even an option? I mean, the March $5 call is 12 cents, John.
I didn't even think it was that high. No, then you got to start doubling up. It's 12 cents is the last trade. That's a lot of time.
To me, that's almost a buy just on the number. Like, I mean, why not?
With what's going on, that's what's
not it shouldn't.
Well, that's what's got everybody stuck is what to do. There is no good. There hasn't been any. It's not like the premium was way up there before. It might have been 16 cents here a couple months back, but there hasn't been any premium. And then you start shorting stuff in the hole, and you get yourself into trouble. You watch it, and it'll go down every day, and that's just the way the market seems to work. When you do get the courage to like I say, is join them, the easy money, they tend to they change their mind, or it seems like they know exactly what you're doing, and they go the opposite. How likely is it that we're going to see a rally? Every day that passes is less likely.
Right.
Because the plant gets bigger. It looks like, where are we going to put all this? And there's a lot left over. The 1.3, 1.4, which we've been talking about, that number's not right. We had more good export inspections. It has no impact on the price. It has not had any impact. And there's just more of everything than the USDA thought of. It's clear as day. Cash markets would be much firmer if that wasn't the case. One can make the case, though, that we don't belong at 419 for July, which would be what I believe. Still, the cash market says this might not be way out of line, and that's kind of scary for the new crop. That's for sure.
No, that makes sense. Let's talk report. We have a report next week, right? Is it next Monday?
Big report.
The report for summer, right?
Yes.
So Are you doing anything, positioning anything, or have plans for next week?
It's the kind of report where you buy the put, you buy the call, the strangle, and it's those kind of reports where those strategies can pay. I haven't looked at the corn. If you look at August options, they're going to be very reasonable for obviously beans and corn. You can own both sides, meaning you can buy the put, you can buy the call. Let's just say they're 12 cents each with 2 weeks to go.
I'm pulling it up right now. I can tell you. So August at 1060 and the 1060 call and put were 21 cents for the call and 19 for the put.
So 40 cents is what your range would be. So it has to move 40 cents in the next two weeks for you to benefit on that position. Now, this has not been a market where we've seen these moves. That's a strategy that normally would be really good for this report, or could be really good, because the idea between buying the put and the call at the same time is they both can't be wrong. Like, the worst would be a very neutral report and then it just goes flat. You'd probably lose a few pennies on both sides. But they're good for reports that you could get a huge surprise. Now, they probably won't be changing the yield. They don't like to do that early, and I don't blame them. If anything, it would be going up, not even down right now.
Right.
So they probably won't touch that.
You want corn in the threes? Let's change the yield.
The cash market's already there. Right. So you look at what we see is usually disappointment because they don't move the numbers around a lot. So what you want to be looking for is a cut from, they're expecting 95 million acres from 95.3 in March. That's not going to help the market. As a matter of fact, if they confirm 95, I think the market's in for a rough time in corn, where beans could actually have a surprise. We had that 2 years ago where beans, I think, were near limit up or close to it, up 45 cents. Then they tacked on a bunch more after that because the acreage is so small. So this one can move the market a ton. But it's like the other ones. Like, if you were buying puts and calls in front of the other reports, really, they haven't paid. It's a low price. It's hard to protect a low price with more money. But expect volatility out of it. I would. The markets obviously wants to be short going into it. I don't see them lightening up a lot, but they might, days in advance. But I do like the strangles normally for this one in beans more than corn. And then you might get a volatility spike after it. You might get a shocking number, but still, the problem with corn is no one believes the 1.8 and the 181. Even if it isn't 181, there's no tightness. If they actually believe the 1.8 number, the trade, we wouldn't be down here. Like, it would have some weather premium in it, and it would take it a little more serious. But the cash market's not good, basis not good, and we have a weak market that they don't believe is going to be 1.8, and that's with great demand. So there's not enough news that could change, in my opinion, to make the strangles work. But what about selling calls and puts afterward? If you get a spike one direction or the other, that could work. We also could find an early low in summer, which I think is the most likely thing to happen, that they get after these grains. It gets really ugly in corn. You find some sort of July low, maybe even August, and then work your way up from there. But after what happened to corn the last 3 years, who's going to want to sit on all this corn? It's not been a winning strategy at all. This year we topped out in February. It did work for a while, and then it really didn't work very quickly. Holding into summer, it's a troubling trend that we have. Normally has been good, or at least in the spring, and it simply hasn't been for years now. So the question is, what are guys going to do with all this corn? Well, they're going to store it. I mean, that's just what happens.
They're going to feed it to their cattle.
They need to expand cattle and start their own little cattle ranch. But they're most likely going to store corn and sell beans, and that's what you see. In my opinion, I think you're doing the opposite this year. You're better off selling your corn, looking at adding calls at some point if it looks like you need to, and then taking your chances on a higher bean price. That's the way I would do it. But lots of things change, and I might change my attitude on that. But it definitely looks like, I don't want to sell out yet, but it's tempting to grab that 450 in March, and then store it till March, see if basis gets better. If you're going to do that, but lock it in somehow. You can always reopen the upside, but it's just a hard market to deal with because there's no meat on the bone. Like right. This is theoretically under the cost of production. Some guys will be making money at $4.50. You also have the insurance level. So a whole lot of, we spent a lot of time talking about wheat and corn, and we shouldn't. That's the bad news. The beans, at least, there's a glimmer of hope that we could see much better prices than what we see right now. It wouldn't take much. More biodiesel talk. And then actual demand with this low acreage, you could actually have a decent bean market, but still temper your expectations there too. $13, $14, you're going to have something happen in August for that to happen. But at least it's not wheat and corn, and the funds really haven't wanted to be short beans at all.
So let's talk beans briefly, because let's just review the last 2 weeks. So 2 weeks ago, I think we talked about that a whole bunch of commercials had switched, or elevators had switched from the July contract at 20 cents over to the November contract, 20 cents under.
It was actually a 65-cent swing.
So it was a 65-cent swing. And then you have the biodiesel news. So did that change any of the commercials, or is the cash still that much?
They said it did. They said it's from the 65-cent switch, it got 25 or 30 of it back pretty quick.
Okay.
Which is kind of a dirty trick to go from July to November overnight. But they're not in the business to lose money either. They obviously don't need the beans, otherwise they wouldn't have done that.
Right. So did this? I know the biodiesel news moved the market, but it hasn't moved the cash that much, has it?
The idea
is the demand actually out there. How long will it take to get that demand up?
They say the simple math on it is that basically it doubled the crusher's margin. You know what I mean? So they're going to they have a big incentive to go out there and buy as many beans as they can and crush as much as they can. Much more, double what last year.
Sure.
Just simply on paper, that's what it looks at. There's more to do. That's just the House version. Then you're going to have the Senate. So who knows? You got a lot of politics. But for 26, it looks better than 25. But as we know, time marches on, and we'll be in 26 very, very soon. Mm-hmm. But did it change the demand today? Probably not. No. And that's what the market's already trading. What did we rally 3 or 4 days? And they're already fading this rally.
Yep.
Corn, what did corn have up 2 days? And wheat 3 days.
Oh, yeah.
So you're getting 2s and 3s, and that's all you're getting out of these grains. But like I say, the second you muster up the courage to just hop on board and get short, it seemingly changes its attitude, and you should have waited a week or two. But you sit there and wait for a bounce this time of year. I don't want to short it in the hole. That doesn't usually work seasonally either. So you just caught between a rock and a hard place. Not much has changed. But I was really excited for this episode because I thought we were going to have all this stuff to talk about. You had all this momentum. You had a nice tailwind from last week. And it just completely fumbled the ball immediately right out the gates last night when it opened. There was nothing there. What was corn up 3/4? It was down like a penny and a half shortly after that. Wheat was down. Is the market underplaying what's happening in the Middle East? A lot of people will say yes. But of course, a lot of people want the crop price to go higher. So that's if I was raising it, I would say, that should make it go a lot higher. But we're just not seeing that unless we see a big attitude shift tomorrow, which we can turn around Tuesday.
Yeah.
It looks pretty dire for the grains. They also say when your broker says sell everything, or and you get scared, that's a good signal to get long. And that can be right. It's just the wrong time of year for this to happen. As a plant grows, psychologically, you look at it, you start seeing a tassel, and then you're like, oh, this thing's going to be real here pretty soon. And what am I going to do with all of it? And that's really the change in attitude the market sees. A small plant that's vulnerable to this big one with enough moisture to get it through at least 3 more weeks, and without any heat in the forecast or threatening heat, then the market tumbles. And that's how you find your early low on this kind of panic selling. And I think was it August last year we had our low?
Yeah, that sounds right. It was September timeframe when everything started going up.
September was up, and it usually goes down.
Yeah.
So you'll find your low, but what do you do from there? Like we've thrown out some ideas. the synthetic put last week. You can't stay to the party too long either. It'll go down to a price, then it won't go down. So you don't want to get caught short at the bottom either. Just not a good situation. I do want to concentrate on the beans. Look for opportunities as we go into next year. But right now, it's the same market that we've been dealing with. They want to sell it, and they do it with reckless abandon. Really, actually, you have to go back a number of years before you've seen a market this weak. I mean, it's just every day, and it grinds on a guy. And I'm not a producer, and I'm tired of watching it.
Well, on that note, let's talk silver, because, man, do I like the silver price. There's got to be some happy people out there now. It's starting to make some moves.
Yep, up 1.5% in platinum. Dollar index, I mean, that's another thing to keep an eye on. That's another complaint about the grains. The oil's going higher, dollar index going lower. Yep. We're getting good demand on the grains, and we're still going down. Just a terrible combination. The Dow bulletproof, what's that? Up 321, lobbing missiles around. Why not go higher?
Why not?
Started down 300, and it's, they buy any dip, and it's that same old stock market. The metals have been the one market that's just kind of marched up and hasn't really stopped. Silver is at 36.22. This is where it struggled at in the past, though. This is where it gave up in 08. Rolled over. I know, because I have some $35 silver, that's for sure. So this is an area that it's really had a problem with. Gold it's not making new highs, but it had made new highs, where if silver, the old highs were 50 something, when the Hunt brothers trying to quarter the market.
Yeah.
So silver is looking good, and it's grinding higher, and then getting involved with it's volatile. Like, people want, like, how can I get in? It's a big contract. It's 5,000 ounces. And
isn't that what you normally carry?
Yeah. And then there's 1,000-ounce contracts, but the silver contracts are big. They're volatile. Lately, it's been kind of nice, but you go back into April. I'm looking at the chart right now. 2 gigantic days down. I mean, what was that? Yes. From 36 all the way down to 29.
Yeah.
Actually, 28
in 2 days.
Yeah, 2 days.
Well, the third day was the spike
bottom.
Low. Yeah.
So that's always the problem with the metals, is those windows where it does that. You don't know if it's real, but I mean, that's a big drop. That's a $40,000 drop on one contract of silver, on the 5,000-ounce contract. And it was kind of out of the blue. I don't remember what was it what was that one? I think at the beginning of the tariffs, maybe.
Yeah, I'm sure that was the tariff news. Yes.
Yeah. So
it's into that time frame.
Oh, and that's another thing with these markets. It's really, like, look at crude oil today. It's not like, stuff in the Middle East, tensions, they're going to close the straits, and you think oil would at least kind of wait and see what's happening, even if it is like a, symbolic thing with the missiles and it's actually de-escalating. But it hasn't. We've seen this a couple years ago with oil not wanting to go up on these tensions anymore. And it's really hard to figure out how it's going to trade. The metals are too. Like, you can't trust them up here. Yes, it looks like a good buy, but they could drop $10 and it won't mean anything. Just the way this stuff's trading has been a challenge for everybody. Even if you've been on the right side of stuff, you have to have taken profits. Profits disappear really quick. But it seems to go both directions, and you can be right for a little time frame, but longer time frames just are really hard to hang in there and make money.
I had that happen last night. I had gone short the Dow for the weekend. Opened down last night, looked at my profit, thought, I'm going to let it ride.
Money.
I decided I was going to go to bed. I thought it'd be okay. And I woke up and I basically broke even. Yeah. Thankfully, I didn't necessarily lose I maybe lost a little, but every time. You just go to bed. Yeah, you got to take your profit. These markets are, if you see a profit, you got to take it. And I should have.
It's been that way for a while, and it's just really easy come, easy go. They're directional for a little bit. And then the ones that are really easy, like corn and wheat, you just don't do because it looks too easy. And you're thinking any day they have to short cover. Now, we got a pretty good round of that in the wheat, and it had a nice little trip up here. A lot of guys were talking about the wheat corn spread, how that was out of whack. It went from underpriced when we were talking about it. You can go check the tape. We talked about it quite a bit.
It was December, January, I think.
Yeah, and then it got kind of quiet, actually even got more narrow and then blew up. But now they're saying either corn's way undervalued or wheat's way overvalued. Something's got to give, and everybody's kind of cheering for the corn to come up. And it's like, I think wheat's coming down. That's my bet.
Yeah, it really doesn't go the way you want it.
No. It's like, it's like wheat got it sort of expensive versus corn for a day and a half. Now we're right back in the regular range. But a lot of troubles ahead. I mean, what are your thoughts? What could be the next catalyst at this time of year for corn?
I definitely don't want to even guess on corn, but I could see something happen to flip where things are going right now. I'm not convinced that where the indexes are, where the stock market is correct. And so if those start coming back, then I think what else is coming back? I mean, you were just talking about the chart with silver. When the tariffs went on and there was the larger pullback across the stock market, all the metals were hit. The dollar was hit. All the grains were hit. Everything got pulled back at that time except maybe cattle. Well, right now, even cash cattle, which we haven't touched on, right, is coming back a little bit. Cattle market's been down.
Cash cattle they're saying $3 to $7 lower depending on the region, but call it $5 less, and that sounds like that's trouble.
It's nothing, but the
futures have been going.
Futures way down.
Yeah, so they keep on falling more than the cash is. They're definitely signaling this could be some sort of top, but. Back to what you were saying. Do you believe that the inflation's going to buying's going to find the grains? Are they going to come into favor this year?
I do. I think that what I was saying is first I could see a stock market pullback, pulling everything back.
Yep.
Before things start going up. I just. Or it's going to take some major catalyst, and I don't know where that comes from because I feel like everything's so negative right now.
It felt like it was coming here with what was going on in the Middle East, and that was it. It's like, it's always changed. It's like we were talking about on Thursday, and get ready for that market. And it just, is it the head fake that it actually is going to rev up and be a big deal, or is it the de-escalation? All of them you have to take day by day. No one really knows.
If the Middle East becomes a much bigger conflict than it is right now,
that would do it.
But how long does that drive up grain? Because who buys it then? Well, I mean, where is it getting used? Yeah, where is it getting shipped to?
Ukraine was easy because it was like it threatened the production of a major exporter. Where the Middle East generally imports, obviously export
wheat. And if there's war there, are they buying wheat?
Yeah, are they going to buy more because they think that they're not going to get it, or are the shipping channels going to be, closed? I would think wheat. I think you got a little preview. It would go higher. I would think that they get worried about feeding their people. You're going to find more buying. If they start bombing ships that are delivering that stuff, that would be like the Russia-Ukraine war.
Yeah.
But they just don't fear any of that. They don't put a premium. The old markets not long ago would have had. This thing would be ripping right now, and everybody was saying like this shouldn't be even going up this much. Right. Like we're not going to sell anything. That's
what I've been expecting all spring.
No, it has been absolutely nothing.
And we've been talking about this with oil for. That's got to be close to a year. When did we start?
Production's been up, and it's been...
No, I know, but we started talking about oil for sure last November, December, when there was Middle East tension.
Yeah.
October.
Over a year.
With Israel, right? Yeah, that was over a year. So, and there's never, the whole Hamas invasion with Israel, that kicked it off October 7th. Or whatever.
Never went up on that.
It did not go up on that. Old market 2 years ago, that would have been $30 up.
Just flying.
And the grains, they're we definitely would have been. We didn't move on it. I don't know what's going on right now.
And what's really disappointing with the grains is with the dollar coming off a pile. This is as low as it's been in a while, and then oil coming up. You still saw very, very little enthusiasm. They got this thing really pinned in the short side, and they're gonna stick it. in an area where they want to put it. So yeah, without a severe escalation of what's going on already, I'm at the grains and oil, everything's telling you what it wants to do, and that's not go up. Now that attitude does shift, and when there's no money on the downside, these guys will be on the long side. We saw that last year in corn.
Yep.
Ultimately, that rally failed spectacularly in February and hasn't recovered, but they did start buying in September. We could get something like that this year. I mean, it's not unheard of. I think it would be more likely in beans than corn, and then beans maybe pull corn up for battle for the acres, but it's not gonna help if basis is horrible.
Correct.
And you're getting minus 50, minus 60 because it's corn's everywhere. You get a 40-cent rally, and they would just widen the basis out. So it's going to be more of a supply problem, I think, for corn, because I don't believe the corn number is right now 1.3, 1.4. The cash market's not trading that.
What do you think it is? I mean,
It's
what's
more like
John's number?
I'd say 1.8. I meant easy. That's you'd see tightening somewhere. I mean, you're seeing a little bit in some regions, but there's plenty of corn left over. A lot more. Guys have been selling aggressively the whole time. It was just that much corn out there.
Right.
So the way that 20 started is everyone thought corn couldn't go higher. We'll tell a story here. And they threw out that 3 billion bushel. Yes. Everybody thought it was going higher in 2019. By 20, no one thought it was going higher. And nobody wanted to sort. Everybody just wanted to get rid of corn and get out of it. And this is like summer going into fall. And then what happened is they projected 3 billion bushel carryover in August. That was the low, that report. And a lot of guys just get me. I don't want any of this corn. And sure enough, that was the low. Funds bought aggressively pretty much every day, nonstop, and it went ripping into 21. Absolutely on fire. We were running out of corn. China was buying every day. Very different markets than these, but that was a market that everybody had given up on totally. This doesn't feel like that at all. Basis was better in the 2 years leading up to that. 2019, the acres were really missing. China's not going to be in there buying. So, you hope for something like that, but it's nothing like that. You know what I mean? The feeling of dread and the lower price every day is the same for sure. But none of the rest of it fits, though. So I just don't see a scenario like that playing out.
The other one you could talk about would be 2012, which was
the drought.
The drought. Like everyone knew the drought. Everyone's talking about the drought, and the prices staying down. They kept it pressed down through into July,
like
right?
this, yeah,
like this. But the drought was out. Like there was talk. It was an obvious drought. It was
people knew damage was happening.
People knew the damage was happening. We're just not seeing that right now.
No, it was really hot. I mean, we moved that summer, so sure enough, I was out in the truck quite a bit, and that was back when I moved myself. I don't know if I'm going to do that next round, but it was hot, and it stayed hot the entire summer. But like you said, everybody knew it was in trouble by this time of year. This is exactly to the day when it took off. When the options expired, the July options, which went off this Friday, it was the following Monday where they're just like, they saw that 4th of July forecast, and it was just intensely hot. Damage was happening, and it was going to get a lot worse, and it did. It feels nothing like that this year.
No.
It's not even a distant cousin to that. So now we're left with, well, we hope the funds change their attitude and just buy for no reason. And that's not a good spot to be in this time of year. So on the Thursday Insider, we're definitely going to throw more stuff out there. What specifically are we looking at? And what I don't want to do for guys is get them in a hole, get them short at the bottom, and then have it rally out of there. But also I feel like there's a gray area where you can do stuff with options, whether you're selling calls, buying puts, and giving yourself a window for it to rally. Something. We'll come up with ideas, and we'll get them out there to you.
Well, and there are opportunities to add 10 cents, to add 5 cents.
Exactly.
It's obviously not guaranteed, but there's opportunities to be able to add 5, 10, 15 cents. And you got to take it when it's there.
Yep.
and be prepared for it. But there are opportunities out there to do that. And so finding those in a year like this is extremely important.
Yeah, it would be great to have a crystal ball. It'd be nice to know whether you should farm it out and sell that March and then sell a call on top of it. You don't want to double hedge, but I'm just saying add premium to that, contract it, then sell a call. And then 26, you can get a decent price for a 26 corn and then sell a 26 call on top of that. And actually get a nice price. I mean, you can get up easily in the 490s by doing that. But you take all the upside out. But it's not as bad as it sounds because there's so much carry in the market, how much upside is in some of those more deferred contracts. There's inversions to sell. July 26 is over December 26. And we're watching it was a really bullish year this year, and where are we, minus 15 right now?
Right.
So there's December 26 is over 27. There's things a guy can look at for sure. Are the inversions going to go to carry? Well, you can participate in that. Yeah. It doesn't come without risk. So,
but when we talk risk, like one of the things about going out with that deferred is that you're going to see, especially if the funds make a move, if that's our only catalyst right now, the funds aren't going to make a move in December 27.
No,
they're going to make the move in
the front
July and August. Yeah, you're going to see it in these early contracts first, and you just need to be ready to move.
Yeah,
you can't wait 3 or 4 days to watch.
December 25 is what, 32 cents under December 26. So the price is in the front's under the next year's crop, which is normal for this time of year unless there's a threat. But that can go to zero. Like you say, the front can move fast. You could rally 35 cents and not come up at all for 26. The risk goes a little bit in the back there. But what I don't like about it is all that time taking out the upside. Can you buy calls after you lock those prices in? Absolutely.
Yeah.
But that's the margin's not there, for spending 14, 15 cents on calls, 25 cents for more time.
Yeah.
So round and round we go, but you still can't give up on it. I'm very interested in the carry the market has. I want to try to use that to a guy's advantage. But I just don't want to be short a bunch of futures in the hole without at least looking at coverage of the upside, like I said, with a synthetic put, because we still have more weather to go. The Middle East thing was kind of spooking me on doing anything. And then today happens, and it's like, well, I guess you can do anything you want on the short side because nothing makes this market go up.
Right.
But you're seeing too much grumbling on Twitter about it. It bothers me.
That does bother me. The contrarian in me says if people are saying you got to get short, it's time to buy. But
yeah, well, no one's there yet. It's just a sense of dread. You're in that whatever phase. You're in the denial. Yes. You're about ready to move to the sadness phase, whatever it is. But that does happen every time this time of year where it's too hot, it's gonna go, and it just doesn't. Then it goes down, and then when the fear happens and the phone calls happen and the panic happens, that's usually when you find your bottoms. By the time guys get so emotionally involved or hurt that they pick up the phone and want to do something after most of the damage is done. That's what's tough about this market. Is most of the damage done, or are we just beginning? I mean, I don't think anybody knows the answer to that. 419 seems really low, or 420 or wherever it ended. But then you look at the carry in the market, 450 seems really high for March. So I want to sell the carry or get involved in that somehow. I'm not sure how, whether it's just a put. But I want to figure out a combination to take advantage of the carry they put in the market. Maybe sell some of the inversions and back. None of these are recommendations. We're just throwing ideas out there to get the juices flowing.
At some sort of straddle, I suppose, out in March too.
You got to think there's something secret that we're just overlooking. That's the best idea in the world. I actually had a good one last year, which was we had bought some puts and then we sold 510, 520 March calls, and it paid for the puts, and it looked awesome till about September. Then the attitude shifted.
Yeah.
And then all of a sudden these calls look like, oh, these could get exercised. But in the end, as everything now has expired, it would have been just fine. It would have protected you. The calls would have expired worthless. Nothing hung out there. But the attitude did shift last year, and it looked like a different market than what it was this time of year. I just have a really bad feeling about this corn market, though, with the amount of acres out there. If that's confirmed on Monday, I think corn is going to have a really rough time if the weather stays good.
I mean, We had a little bet. I don't remember what that was, when it was.
Oh, beer.
But
I owe you beer.
No, you owe me a beer from December, but you and I had another one on acres, and you were at like 95. We'll have to go back and find that.
I must have won that one.
Something.
I must have won that one.
Well, isn't it coming off the March, this report, the June report?
I've been hot. You remember the fishing tournament? You came into the dock, and I told you the weight. Yeah. And these were live fish that were weighed to the 10th of an ounce. I was right.
That you nailed it to the 10th of an ounce.
That I've been trying to do that for 13, 14 years, and I finally got one. But to the 10th,
so
that's impressive.
You also nailed the cattle high.
Well, until
June. The first one.
The first one until it got completely demolished later. But yeah, it was. That was actually a good one too. Okay, so for a while.
Your corn acres are like 95.6.
Yeah, I think
we'd have to go back and check the tape. I went way high.
Yeah, you were high. You were getting people fighting mad at you high.
97, John. That's what I'm expecting tomorrow on Monday, next Monday.
If you do see that number, that would be a devastating number.
I think we get 320 corn.
I think you could get 320 cash at that point pretty easy. I think you'd probably see 385 if they throw 97. I think you'd see 385 futures. I don't know if it would stay down there, but I think you would see it. Yeah. What's going to be interesting for next year, real quick, is going to be the soybean corn ratio. That's another place that can a guy get involved in long bean short corn, or is it too late? That's something we might talk about on the Thursday Insider. Is going to be the battle for acres. It's too bad because we have too much of everything, but beans do have that low acreage. They really have that going for them this year. So is that going to play out to where we have a rally that pulls corn up, and then you have somewhat of a little battle for acres? I mean, I hope something happens. I mean, I'm trying to be positive with the beans. They look like the most positive. But even, look at them. They're down 14 cents, no problem today. You can't try. It's not like you're going to go buy beans and ride it to $12 right now with the weather being what it is.
Why not buy them? They're on sale right now.
We should check before we go here. I'm going to check the really quick the crop conditions.
Okay. That was what it came out.
Let's throw some bad news on top of bad news.
So while you're looking that up, I am going to say we must have a whole lot more to talk about because we are much longer than we normally run on the podcast. So it's kind of nice to have some news at least, though. It
is nice to have some news. It did seem like this was going to be a day where we were going to talk quite a bit about this stuff. Being positive, and it couldn't even last a day. I meant Thursday, Friday is all we had, and then things got a lot worse. Not that you're cheering for that; that's just the way the markets were going to trade. And no, there's no good news. I meant just better weather, better forecast. That's not good news. So I'm just going to pull up the latest here. It was 72% good to excellent last week.
I wasn't in town last week, so I didn't.
I think it was 72. They were expecting 72, and then this week is the interesting one. It's probably going to go down a little bit in the east, and then the west is where you would think with all this heat that you're going to start seeing gains. A lot of that's not going to be in the market yet, but I don't know why. Why don't I just crop conditions? I was going to pull up the USDA site first, and I went to Twitter, and I should have went to the USDA site. That's the easiest way to get it. That's for sure. I should have it emailed. They have improved for the fourth straight week. That's Karen Braun, who's widely followed on Twitter, and she's a very good follow. She does a cartwheel later on a headstand.
Handstand.
So she's saying pollination is 10 days away for the first two fields in Indiana, Illinois. So up again. So
I haven't seen the actual numbers.
No, this guy says 70% good to excellent. So I'm going to go with. Well, that's her crop watch. So the official one is actually down 2% from last week. I don't think it's going to matter. It's not going to matter at all. 70% is a real high number.
Yeah.
And
72 would matter in the wrong way.
And I think it's going to be the east that you're going to see the declines. And I think that probably this next week you're going to see it go back up because of the heat and the humidity and the rain. But we'll see. Not a lot of good news out there, but we'll make an effort in Thursday's deal to try to go over some more specific stuff in corn. I don't know what to do in beans. what do you do with this market? If you guys have asked, should I market cash beans or contract beans? Buy $12 calls. If you guys have bought $12 calls, that was a while ago for the summer weather, and so beans are just kind of in a spot. Maybe they're the right price. I mean, it's hard to know. Anyway, my phone's ringing, and we've run long. We've gone nuts today.
Well, you better tell people how to get a hold of you if they want if they want recommendations, John.
Yeah, so we can't, as brokers, we can't be putting recommendations out there. We can put ideas for guys to think about.
And I want to clarify, the main reason we can't, well, one, it's
Compliance.
Federally illegal.
Yeah.
But two, everyone's situation is different. So the right recommendation for you is not the right recommendation for me and my situation.
So we'd rather talk to you, and we're still open to visit. So if you have questions on it, you just call us, and we would talk to you. If we're busy, we'll call you back, and we would go over specific ideas that guys are doing, looking at things that that guys that know a lot about the markets, what they're saying. We'll give you a lot more details on what's going on. We just can't do that over there. We can throw out ideas that we're not really doing, or we're thinking about doing, might not do. And we often talk about both sides. Like we said, one guy might have his corn already all contracted at 480, and he's laughing. For that guy, we'd be looking at spots to maybe be re-owning it via call when it looked like the bottom. You know what I mean? So he's in a completely different situation than the guy that's got nothing marketed and is going to have to do something in at least 10% or 15%. So everybody's different. That's why, one size doesn't fit all, and we'd rather just talk to you one-on-one, and we'll keep doing that till we get too busy to do that, and we'll let you know when that happens.
Absolutely.
I mean, it's plenty busy. It's just, I just feel like if a guy wants to learn and he doesn't know how to approach, we're the perfect people to talk to.
We're here. You didn't leave your number because I interrupted you, though.
218-731-1578.
Thanks, John.
Yep. Bye. Rain, what is it? Rain on the Scarecrow, Blood on the Plow? We should start with that song.
I don't think we can do that.
We'll do that when it's down in the threes.